Your balance sheet may be missing something. When business owners review their balance sheet, they usually focus on the obvious assets: cash, accounts receivable, inventory, equipment, real estate, investments, maybe even intellectual property. But what if one of your company's most valuable assets isn't listed where you expect it to be? What if it's sitting in a filing cabinet untouched for years? For many businesses, that overlooked asset is a key person life insurance policy. Years ago, your company may have purchased key person insurance to protect against the unexpected loss of an owner, executive, founder, or key employee. It was smart business planning. The policy helped protect the company from financial disruption if something happened to someone who was critical to the business. But businesses don't stand still. Partners retire, executives leave, ownership changes, companies merge, operations evolve, and the person who was once considered key may no longer have the same role or may no longer be with the business at all. Yet many companies continue paying premiums on policies that no longer serve their original purpose. As time passes, those premiums can become increasingly expensive. Business owners often ask themselves, do we still need this policy? Unfortunately, many believe they have only two choices: keep paying the premiums, or let the policy lapse. But there may be another option. Depending on the policy, the insured, and other eligibility requirements, a key person life insurance policy may qualify for a life settlement. A life settlement allows an eligible policy owner to sell the policy to a licensed purchaser in exchange for a lump sum cash payment. In some cases, that payment may be greater than the policy's cash surrender value. Every policy is different. Not every policy qualifies, and a life settlement isn't the right solution for every business. But understanding that the option exists is simply good business planning. Imagine what additional capital could do for your company. Strengthen cash flow, reduce debt, invest in new equipment, support expansion, hire key employees, fund succession planning, or eliminate the ongoing cost of maintaining a policy the business no longer needs. The important question isn't whether every key person policy should be sold. The important question is whether your company understands all of its options before making a decision. A policy review doesn't obligate you to do anything. It simply helps determine whether the policy still aligns with your business goals, or whether it may represent an overlooked financial opportunity. If your company owns a key person life insurance policy and the insured has retired, left the business, or the policy has become increasingly expensive to maintain, now may be the right time for a professional review. Before surrendering the policy or allowing it to lapse, speak with an experienced life settlement advisor. A free, no-obligation policy appraisal can help determine whether your policy qualifies and whether it may have value beyond its cash surrender value, because the strongest businesses don't just manage the assets they can see, they uncover the value of the assets they've forgotten.